Okay, Stratman here from pipware.com. Just following on from a part one of a counter trend trade we're doing. We're looking at, we're in a trade at the moment. Here it is on our Ender account. There was our entry based on on part one. Be sure to watch part one. We're down. We're at about 2 pips profit. I'll just show that again. 2 pips profit. Not a huge trade this is going to be, but now we've got to start thinking about managing this trade and potential profit targets. Well, this is a counter trend trade. We're going up, 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 up against the compass. What we're looking for is we've identified that we've got about 24 pips left heading towards the compass. So what I might do is I like to think of 20 pips as a normal size trade if we can. So we've got 24 pips from here down to here. We've already made 2 pips. So potentially if we did a 20 pip trade, it would bring us out at about 4 pips above the compass, which is kind of what we're expecting. So I'm going to go and adjust my order now to come out kind of around the low of the Tokyo session, possibly. So let's work that out. So I'm after a 20 pip profit. So I'm going to modify my order. I'm going to have a take profit for 20 pips, and that's my standard kind of amount that I aim for, so it was already automatically in there. The stop loss is currently 33 pips away, and off we go. So our take profit target is 44.62. So let's look at where that is on here. Might even mark that on there just so you can see it. 44.62. Let's just put that on there. 1.4462. And like I said, it's pretty much at the bottom of today's range for the Tokyo, which has been 33 there. So price comes down and hits this line, we'll be out of our trade for a 20 pip profit. And this is all we really can expect for a counter trend trade. That's why we were looking to 35 pips distance here, because as the trade continues, this coming downwards, these two will start closing towards each other. So this compass will keep moving upwards, so the amount of movement gets smaller and smaller. So by the time these two reach each other, hopefully from an entry of about 35 pips distance, we should be down to about a profit of about 20 pips, which is what we're aiming for. So that's why we've got it here. So again, it's just a waiting game. Wait this little trade out. We've got a little bit of a reversal happening here. We're not too worried. We've followed all our rules. If we end up with this trade losing on us, that's just par for the course. This just happens, and we take it on the chin. We take responsibility for the fact that we followed all our rules. And if the trade doesn't actually turn out how we expected, we've done all our homework. We're happy. We move on. So let's just leave it now. I'll pause and we'll come back and see where this trade ends up. Okay, we're now in profit a bit more. We're 5.3 pips in profit to be exact. We're still kind of heading down. It's a bit of a slow trade. We've just passed through the high of the last H4 candle. We're now hitting the high of the low of the last H1 candle. That's what these two white lines are showing. They're part of the dashboard. So we could get a little bit of a bounce off here. Don't get too concerned. If you're a little bit worried, you could exit the trade right now. We can see the Hong Kong session, which is green, repainting itself as price kind of hovers over top of it. So ideally we'd like to see this go a little bit more, get down to our take profit. Currently 7.1 now pips. Like I say, you could take this as profit now if you like. It's just a small counter trend trade. Not going to make us huge pips, but hey, there you go. So I'm just going to pause. I'll keep this in for a bit longer. Potentially for me, Would I take it out? Would I leave it in? Well, not really that sure. Maybe we could move the stop loss down to break even right now. That could be an idea, and that way we won't be taken out for a big loss. Now, why did I choose 30 pips as my stop loss? Let's just have a look back here on the THV charts. Just switch to, well, if I just drag this up a little bit. By the way, these are available down on my site, pipware.com. You can see down here, this is kind of like a 3 times a 20 period ATR, or average trading range. Typically it's around 37 pips on EU. That's what this is saying right here. It's saying that current volatility for the last 20 bars, so that's all time, the average trading range of all the bars that we've got in the system, is about 37 pips, 3 times the trading range, and right now it's about 38. So ideally the stop loss should be about 38. I chose 30 because I was able to get into the trade with a very strong resistance point just above me, so I just went a few pips above that, and I'm quite happy. So just pause it again, we'll come back shortly. Just talking about that stop loss, it's probably about time. Normally about 10 pips we might want to move our stop loss. We've got a significant movement here. I think we might move our stop loss down to break even. Break even would put us just above our last H4 candle, which is usually a fairly good support and resistance point. So that's what that white line is. So I'm going to just put my stop loss above there, which is at break even. So if we lose this trade, we're not really too worried. So let's just do that. So we want to modify the order. I'll just do that off screen because I want to save a bit of time. Okay, so we've moved our stop loss to break even. Here we are. We got into this trade at 144.819. Stop loss is 144.819. Price is retracing back. Look, we are in a little bit of profit. Like I said, you could take it out early and make some money right now, but ideally you want to try and get that 20 pips if you can. There are going to be plenty of other trading opportunities coming our way. We can take those, but we don't want to be greedy, and we don't want to unnecessarily lose money. So having a look here, look, we probably will get a retracement back to our H4 candle. If we hover over the top of the H4 candle, we can see the H4, it's called the H4 high line, 1.44772. Take the spread into account, which puts us a little bit above. We're sitting quite nicely just above that. It's pretty close. 82. We're about what would we be 4 pips. So yeah, about 4 pips above the H4 candle is where our stop is at the moment. So if it goes back above that H4 candle, we'll get taken out, but we're not going to lose any money. Okay, knowing that this is a counter trend trade and something that is quite risky, we realize that with the M5 chart here, with the coral, we've started to, our trade got in about back here somewhere. We came down and we've hit the MR1 resistance point. We're above the daily pivot, so one would be expecting that price will continue on its upward trend. So maybe we're kind of at the end of this because we bounced off MR1. We're not too worried because this trade is not going to lose us any money. So we'll just stay there till we see see whether we do get a turnaround here, or whether indeed this is a bounce off the MR1 and therefore continuing on for the day in an upward trend. Okay, so it looks like we're probably going to get taken out of this trade, and there it goes, just taken out just then. All good, we're happy, didn't lose any money, we followed all our trading rules, and we're happy people. So potentially what we're looking at here is now we've got to consider going long, but we're going to be going into some pretty serious resistance here at 1.45. So distance there in terms of pips, if we measure that, is about, look, it's less than 20 pips away. I wouldn't be considering trading into that solid resistance. So we're just going to wait around for the next best trading opportunity. There's Stratman from pipware.com signing off. Thanks, we'll catch you later.